Ross. So good morning, good afternoon, good evening to everyone. It's great to see you. Hope you had a good weekend. Welcome to day 3 of the meeting. In terms of today, we've got a couple of apologies in terms of Bernard will be probably about half an hour to 40 minutes late joining. He's got a work commitment. And also we had an apology from Nima, who actually had a graduation she was supposed to be attending delayed, so that there was a direct clash with today's session. So she sends her apologies, but you know, entirely appreciate these things happen at the moment. In terms of just attendances today, one thing I would like to draw everybody's attention to is that, as flagged last week, we have Dr. Mariko Obayashi, who is the new member from Japan, beginning of next year, and she's been able to join us today. So welcome, Mari. And I think then in terms of process today, obviously we've got 2 discussions on ED78 and ED75. Both of those are progressing reasonably well. We clearly have some issues that we need to discuss today, but just to flag that subject to the progress we make, ideally I would like us to get to an approval subject to any remaining issues that we want finally resolved or we want to see material back. I think we're probably in range on both of those. I say without wanting to tempt fate, but so just to say that that is where we will hopefully get to, but I will clearly take a check with members as to whether they feel comfortable at the time that we get through the issues as to whether they feel comfortable with approving subject to in both cases. I think that's probably everything I need to say at the moment. Ross, anything you can think of before I pass over to Dave?
Just a quick reminder that Dave circulated an email to members with the measurement documents late evening time in Toronto yesterday. So all members, TAs, have those documents to review for Thursday. So just a reminder, if you don't find that email and you're looking for it, let us know. We'll make sure you get it. You're on mute, Ian.
Thanks, Ross. Yes, good start. Yeah, thanks for the reminder, and thanks to staff for the work that they've put in, both on drafting, but also I know there've been quite a few different conversations with members and TAs. So thanks everyone for working together to move those issues forward. We look forward to reading those, and those will come back for the session on measurement on Thursday morning. So it gives a day or so for us all to digest what's been circulated. So with that, we move into the session on ED78, the IPSAS 17 update, also including the heritage and infrastructure material. Dave, go to you first off for the coordinators report.
Thanks, Ian. So as Ian noted, not to get ahead of ourselves, I think we're in a pretty good spot on ED78. The board's moved through this material as a combined project since March. We got through the bulk of the issues in September, and there's a few remaining issues that came out of an in-period review that occurred in Q4. So even though we don't have a significant number of issues to cover this quarter, staff put in a significant amount of work really preparing ED78 for its approval this quarter. So the way the in-period review worked is on October 30th, as you all would have seen, you received an email with the ED and some instructions on how to go through it. Coming out of that in-period review, we received the ED marked up with several comments, and then 6 comment templates. And in these comment templates, we had a few issues identified. So I'm going to put up my slides and just show the coordinator's report slide. So there's a few issues listed here, but the three that really wanted to address this meeting and the bigger issues are the first issue, which is asset management plans. The second is disclosure of unrecognized property, plant, and equipment. And the third one is the third from the bottom, heritage revisions to IPSAS 31. We also have a few smaller issues that you'll see in 5.2.2, the other issues paper, and those are issues that directly came from the in-period review. Ian, I'll stop here for a minute to see if there's questions or comments on the process that we followed this quarter.
Okay, thanks for that intro, Dave. Any questions on process and the approach? Not seeing any hands raised, so I think you're good to proceed, Dave. Oh, sorry, Lucy. Go ahead, Lucy.
Thank you, Chair. Yes, I actually agree that the substantive issues identified from the in-period comment templates have already been appropriately addressed, and specifically agree to the development of transitional provisions that require retrospective application of ED 78 and provision of relief when accounting for heritage items for the first time. However, I suggest that in the development of the transition provisions, the staff take into account the limitation on impracticability of retrospective application of a change in accounting policies as a result of the initial application of an accounting standard as provided under IPSAS 3 on accounting policies, changes in accounting estimates and errors. Thank you, Chair.
Thanks, Lucy. Can we pick your comment up, and I'll ask staff to respond to that when we get to that point on the agenda. Okay. So Dave, head us off then into the first item.
So the first change that came out of the in-period review that we reflected in ED 78 is what we've called the fair value option. And this change relates to an issue that a member identified where when financial statements are prepared for group reporting and there's mixed reporting within that group, so part of the group is applying IFRS and the other part is applying IPSAS, there may be challenges when consolidating property, plant, and equipment. And that's because for the portion of the entity that's, or portion of the group that's applying IAS 16, they may be remeasuring at fair value, and the portion of the group that's applying IPSAS or ED 78, they may be remeasuring using current service value or, well, I'll say current service value for now. And the member said that that could cause difficulties on consolidation and may be onerous in order to actually consolidate the financial statements of the group entity. In order to alleviate this concern, what staff has proposed is, in addition to having remeasurements in ED 78 be measured at current service value, we would also have a requirement that when property, plant, and equipment is held for its financial capacity, it would be remeasured at its fair value. And we thought that would resolve the issue between group reporting, as entities applying IAS 16 would more likely be holding their property, plant, and equipment for its financial capacity. So sorry, staff's recommendation is to include a requirement to measure PP&E held for its financial capacity at fair value.
Okay, thanks for that, Dave. So take comments from members. Anybody disagree with that proposal? So I've got Lynn and then Patricia and Camira and Lindy.
Thanks, Ian. So I don't disagree with the proposal. However, the way it's been worded, I think, is not terribly clear because, and I think it's the way it's been worded, it refers to in rare circumstances, and it's not, and the way it's worded, you could read it that in rare circumstances, when you're holding PP&E or financial capacity in rare circumstances, you would measure it at fair value. Whereas I think what we're trying to say is in all circumstances where you're holding for financial capacity, you should value at fair value, but that's not what the paragraph 29, you could read it two ways. And I think the easiest way to deal with that is to remove the word rare. So in circumstances where an item is held for financial capacity, it should be measured at fair value. I think it would be clearer if we didn't have the word rare there.
Okay, thanks then. So I'll take comments from the other members just in around the comments before I go back to staff for response. So next I've got Patricia and then Kamira, Lindy and Todd. Patricia.
Thank you. My issue is related to the motivation that justify the departure from IFRS, because the motivation to create the current service value is related to specialized assets, and consequently because in some situations, highest and best use and maximizing the use of the marketing data, it's not applied. But in my view, there are three situations in relation to the PP&E. The first situation is the common common assets like vehicle or buildings or computer that it's possible to use the two assumptions about the fair value. And the other situation is the specialized assets, but the specialized assets, it's similar in public and private sector, for example, health facilities. And in this case, it's possible to assume the assumptions about highest and best use and the data of the market. But I think, in fact, the motivation to create the service current service value is about specialized assets, but it's specific for public sector, because in the case it's very difficult to apply highest and the best use and the maximize that mainly highest and best use. For example, military assets, for example. Then I think we have two options here. The first one is okay. I agree with the our PP&E shall be evaluated based on current service value, but I think the motivation and consequence need to think we need to think more about this. And the justification is different for the non-specialized assets or specialized assets common in the private and public sector. Specifically because the difference is related to participant perspective, market participant perspective, or a specific entity perspective. What it means in terms of financial report. And the other options, and then the first option is to okay, it's okay with the decision to our PP&E based on current service value, but the justification about the two first case need to be changed. And I think the consequence we think about more think about the consequence, because I think change the concept of capital in different way of IFRS. When I use the replace, the emphasis is in the operational capital, I think it's a good. I think it's okay because I think about the net equity, the means of net equity, but I think we need more time to decide about this. The second option is retain the fair value for the non-specialized or specialized, but in the same way for public and private sector, and create specific rules for the for specialized assets specific for the public sector. It's my opinion. I think it's two options. I prefer the sector one because the part of IFRS we need more time to reflect about this, to think about this. Thank you.
Thanks, Patricia. I mean, I think we need to be careful not to have the debates that are actually quite proper in relation to how we use the measurement bases in ED 77 in ED 78. You know, essentially, we need to make, and there are still some debates we have to have in 77. The question is, should we allow the use of fair value in this standard with the thinking in 77? So I'm not saying I think the interventions are good, but the question is just limited to, can we use fair value here? Can we allow the options for fair value to be used here?
Yes, but I think that can I?
Well, I'd rather take the other interventions because I think discussions from 77 with just, do we allow the option in 78? Because 77 should be where the rationale is for the use of the bases rather than in 78. So we have to be careful about the join between the two standards. So all I want to do at the moment is take comments about, do we allow fair value in 78? We'll come back to the discussion that we've just had when we get into some of the thinking in terms of current service value or whatever we go forward with when we talk about 77. So if I can take Camira and then Lindy and then Todd, please.
Thanks, Chair. I partially agree with the recommendation of the staff. I do agree that we should allow the fair value as an option, but I think that we should not be so restrictive in terms of saying, yes, fair value for financial capacity or current service value according to operational capacity. We should leave it more open, in my opinion, because otherwise, well, I do have concerns also in terms of comparability of information. So in the case of, for instance, an expropriation of luxury cars like Ferrari or something, and in this case, the government decides to allocate those Ferraris to the Ministry of Safety or to the police, and then if they decide, in that case, we are not talking about financial capacity, we are talking about operational capacity, and in that case, then they will use the police will then use the current service value, and then they will then value those luxury cars at the same value that any other normal car, and that information will not be reflected in the financial statement. So we can lead, also this decision of being so restrictive in terms of operational or financial capacity can also mislead the users of the financial statements in this sense. And also in terms of the concern that the respondent said on terms of consolidation, maybe one way we can solve this issue or try to be more transparent in the financial statements is prescribing or asking preparers to create a separate class of assets when they decide to use the current service value, in order that we do not have mixed together assets that are measured at fair value together with assets that are measured at current service value, because we agree that we are measuring totally different things. So I think for understandability of the financial statements, maybe if we also include, like, ask them to create a separate class so that it's easy to identify which assets are measured to current service value. And it will be consistent with what we have done in IPSAS 17 when preparers decide to the subsequent measurement according to the revaluation model, that then all the assets or all the items in that class of assets are measured consistently. So that will be my suggestion. Thanks.
Okay, but again, I think, Camira, you're getting ahead here. All I want to do is take comments on, do we allow fair value, not how. This is, do we allow fair value? The how comes later in the standard. So I'm going to go to, I take that as support for inclusion of fair value, but at this stage, it's just, there are some questions around quite how we describe it, but I think it's support for allowing that option. So take Lindy and then Todd.
Thank you. So I disagree. I don't think we should allow fair value in the standard at all. I think the board needs to decide. I think we decided, and as Dave said last week, that we developed something specific for PPE. And I think we need to make the decision that this is the model that must be used in IPSAS 17. I think we don't define financial capacity and operational capacity anywhere. We just have the concepts in the conceptual framework. So we're leaving it up to preparers to come up with the justification, which could be very subjective and could be a lot of debates around this year it's financial, then it's operational. And I think it can become very subjective and a lot of debates on that. And I think, you know, we then put other options in other standards. You know, it seems like we're backtracking by bringing it back in. And I don't think we make changes or make decisions and include in things in the standards because of consolidation issue. I think we've debated that a lot in the past. And I think mixed measurement groups is not something that ordinarily drives us to make certain decisions. So that's just one of the side issues. But I think we have a public sector specific measurement basis which was designed for IPSAS 17, and I think we should say this is what you apply in that space, and that's it. I think it creates too much confusion, and I have some practical issues, as Camira alluded to as well. Thank you.
Okay, thanks, Lindy. So Todd.
Thanks, Ian. I agreed with the staff recommendation to include fair value. Like Lynn, I think it needs to be introduced in a more neutral way, so it's not a matter of rare circumstances. If the distinction about when you're going to use current service value over fair value is around operational capacity versus financial capacity, I think that is something that broadly makes sense. But a little bit like Lindy, I think we would need to be quite clear and define or explain what we mean by operational capacity and financial capacity, so that people that are applying the standard have better guidance about when fair value would be appropriate versus current service value. And looking at the way that it's been drafted, I think if we're going to set these two up as measurement bases within ED 78, then they both need to be black letter paragraphs. And there may be some consequentials that we need to think about in the standard having the two measurement bases, because in a lot of places we refer to current service value currently, and we may be talking more about a current value if we've got both fair value and current service value as measurement bases in the particular circumstances. Thank you.
Thanks, Todd. So, I mean, I think in terms of the way forward on this, clearly we do have a disagreement within the board. You know, I'm hearing a majority in favour of the fact that for the, you know, a variety of different reasons, we do need to allow the fair value option within ED 78. I think we need to be careful not to bring the debates that are quite proper to have within the standard on measurement ED 77 into ED 78. But we do need to be careful you know, in terms of the point that Todd made, that if we bring in fair value, we need to make sure that we're talking about maybe current value rather than just current service value, or whatever we call it. Equally, you know, so there is some thinking and so on that's required to be explained. I think we hit the same situation that we hit last week, with the fact that as a board we have different views about you know, the income approach and current service value, and the way that you know, I proposed that we handle that, which is staff have worked up in the material that was circulated yesterday, is that we would proceed by including fair value in ED 78, although subject to some drafting changes to you know, open it up a bit more as requested, but that we include it in ED 78, that we make sure that the basis for conclusions explains the reasoning as to why there are two views within the board, the view for, but also the view against, and that we have a specific matter for comment on this. So that would be, I think, my proposal in terms of the overall way forward on this. And I would just like to take a round of comments in terms of, obviously there's detail about how we would operationalize that, but I'd like to just get comments. Does anybody disagree with that, taking that approach for this topic? Okay, so I think we're agreed that that's the way forward that we should take. So I think that's probably our first subject to today, that we would need staff to work with members on the core text in terms of changes, in terms of finessing the drafting on fair value. There are then some, you know, the question is, have we got consistency in terms of the usage of potentially current value, as Todd suggested? Have we got the BCs right that respect the two positions? And I think therefore we would need your input on that, Lindy, as well, if that's okay. And then we need an SMC crafted on that. Dave, back to you. Is that clear in terms of what the board's looking for in terms of the addressing that issue?
That's clear from my end.
Okay, that's good. So move us on to the next point, please.
So the second change that came out of the in-period review related to a member that identified that the IASB had updated IAS 16 in May 2020 and made some, I guess they're beyond consequential amendments, but amendments to IAS 16. And what these amendments did was they removed confusion on how to account for certain revenues associated with property, plant, and equipment prior to it going into use. So as an example, if you were constructing property, plant, and equipment, and you were testing the operations of the property, plant, and equipment prior to it going into use, IAS 16 and IPSASB 17 previously allowed you to deduct that revenue from the cost of the property, plant, and equipment. And what these amendments do that went through in May 2020 is they clarified how to account for those revenues earned from items that were developed from property, plant, and equipment prior to its use. Staff's recommendation is to include those amendments in ED 78 as they help clarify existing guidance.
Thanks, Dave. So just check whether anybody disagrees with that proposal to include that. No, okay, so I think we're fine on that. So then if you can introduce the transitional provisions.
So the last change, as Ian just noted, relates to transitional provisions. And this is where a member identified that we had not included transitional provisions for EV 78 yet. So as a result, staff has recommended that the provisions be, that the standard be applied retrospectively, except for heritage items. We recognize that this may be new for a number of constituents. So as a result, we recommend providing relief on first-time adoption of ED 78 for heritage items.
Thanks for that introduction, Dave. So Lucy, if I can bring you in at that point, because I think now is time for you to make your point.
Yeah, thanks, Chair. No, I just suggest that in the development of the transitional provisions, the staff take into account the limitation on impracticability of retrospective application of a change in accounting policies as a result of the initial application of an accounting standard. And this is provided under IPSAS 3. Thank you, Chair.
Thank you, Lucy. Any other comments? Dave, I'll go back to you then.
Leave that with me, Lucy. I'll go and check consistency with other standards and, if necessary, how to bring in the IPSAS 3 requirements of impracticability.
Okay. Thanks for that. So Dave, I think that takes us through the first item.
Correct. So I think it's over to Amon now.
Okay, so we're moving on to item 5.2.3. Over to you, Amon.
Hello, everyone. I'm just sharing the screen. Okay. So good morning, good afternoon, good evening, everyone. And I would like to introduce agenda item 5.2.3, which is titled Use of Information in Asset Management Plans for Financial Reporting. In September, the task force recommended that condition-based information could be used to estimate depreciation for property, plant, and equipment, including infrastructure assets such as railway tracks, pipelines, and road services. In response, the IPSAS board raised three main concerns with regards to those to the task force recommendation. The first concern was there could be unintended consequences using the term condition-based information, because the term is linked to, could be misconstrued to be linked to renewals accounting, as the board had already indicated before that not to pursue renewals accounting in its IPSAS literature because of its different applications and different interpretations. The second concern was the board raised was that condition-based information may not provide the systematic allocation of costs of the assets over its useful life. Then the third comment that some board members raised was that condition-based information could actually be a method that could be used to identify impairment indicators rather than a method that could be used to calculate depreciation. So staff in the task force took these concerns, and during the quarter, we clarified what the issue is. And the clarity that we're bringing now is we would actually like to state that we are talking about data or information in asset management plans that could be used as a source or input when accounting for property, plant, and equipment. So the task force noted areas where this data or information that is prepared by people in operation and qualified personnel such as engineers and asset management could be useful when accounting for property, plant, and equipment. The first use that that the task force identified was actually using this information in asset management plans as a source or input when calculating depreciation. So for example, you could actually estimate the useful lives of the property, plant, and equipment when you check the condition of the asset and its maintenance history. The other use that we proposed was that it could actually be used, information asset management plans could actually be used to determine usage of the asset. The task force also noted that these asset management plans, the information in these asset management plans could actually be used to also identify indicators of impairment. So for example, when conducting these condition assessments, you could actually use those for indicators of impairment. So the task force actually worked on this, and the task force actually recommends that this information in asset management plans should actually be used as a source of input when calculating depreciation and determining impairment. The task force has also revised the basis for conclusions and the implementation guidance, and would like to find out if the IPSAS board disagreed with these task force recommendation.
Thanks, Simon. So open up for comments. Anybody disagree with the recommendation there? So I've got Mike and then Todd.
Thanks, Chair. So thanks, Simon. I'm sort of in two minds here. I mean, I think it's really good information if there is an asset management plan and it's been reliably prepared and it's been capable of being audited and so on. Use it as a source of input. Whether it needs to be referred to in a standard or not, I'm not sure, but I'm happy that it should be used as a source of information. One of the things, and we use these plans in my jurisdiction, they arose as a result of some work that I did some years ago. And what I found, though, is that often the asset management plans may be very robust and prepared by reliable experts, but there's no funding to provide for the replacement of the asset or to make the assets looked after in the condition that you'd expect them to be. And therefore, impairment becomes as much an issue as depreciation. So I suppose I'm in two minds here. I'm not sure that it's helping. It's a great source of information, but I don't know if it necessarily needs to be referred to in a standard.
Thanks, Mike. So take comments from Todd, Lynn and Lindy.
Thanks, Ian. I think the material is broadly okay to be included, but when I actually read through the drafting, I did have a few sort of issues with the drafting, and I wondered, when we talk about estimates of depreciation, do we mean just calculating depreciation? Because depreciation is a reasonably mechanical calculation type exercise. If you look at the underlying standard, you know, you need to come up with a systematic way of doing it. You know, you estimate your useful lives, etc., etc. So that was one thing in terms of the drafting. I think we need to be talking about calculating depreciation. Agree that you know, asset management plans might help in terms of determining useful lives on that systematic basis for calculating depreciation. But I suppose I would like to see the guidance that's been included here linked more back into the actual standard and the words that are used in the standard around depreciation a little bit more, because as I read through it, it could get a little bit ambiguous the way that it's drafted without linking it clearly back to the standard, I felt. So maybe a little bit of work to do just on the drafting and linking it back to the standard.
Thanks, Todd. So Lynn, then Lindy.
So I think I'm in a similar position to Todd on this. I think the paper talks about using asset management plans as useful information when we're looking at accounting estimates, but the drafting then refers specifically to depreciation, whereas I was more happy with the paper saying that asset management plans might give me information on, I don't know, asset components, on useful economic life, on consumption, and that is difficult to disagree with. I agree that it can give useful input to accounting estimates, And that might not just be about depreciation, it might be about componentization, it might be about useful economic life, it might be about impairment. But the drafting, as currently written, doesn't make it clear that they are useful input to accounting estimates. The drafting talks specifically about depreciation and then confuses me about, am I using it to calculate depreciation, which I don't think is what the paper is saying. And I think it is useful for accounting estimates more generally, and the drafting should reflect that.
Thanks, Lynn. Lindy.
Thank you. So I don't disagree with the other comments. I think, you know, it does kind of look more like a staff Q&A, but if it does go in the IPSAS, then I think there must be more linkages, as Lynn and Todd pointed out. Just also to point out, you would have to assume or make it clear that these plans would have to be up to date and have the relevant information that would be required, because, you know, we could just have these plans because it's a compliance exercise, but actually it doesn't, you can't rely on the information they're in because it's out of date. It's not, you know, it's not up to date, it's not relevant. So we just have to be careful that we're not, you know, we've got that caveat that, you know, it should lend itself to this process, and it shouldn't be outdated. It should be up to date and have proper controls, whatever, in place in order for you to rely on it. Thanks.
So thank you for those comments. So I think overall, therefore, support for the approach. It sounds like we need, it's not that members disagree with the direction that's been gone in, that probably it's just gone it's gone too high level, if you like, in terms of removing those linkages, which, as I think either Lynn or Todd was saying, actually it's probably more in the paper, there's more in the paper that helps you than perhaps has come through in the draft IG material and possibly the BCs. So there is some further work to do to actually get those linkages in there. Certainly, as Lindy has said, there's some questions about, you know, just making it clear that, you know, it should be up to date and so on. I think that's sort of implicit, but probably needs to be made more explicit to make this useful then in terms of IG. So I think on that, my proposal would be that staff work with a small group of members, probably those that have made comments, to get that drafting right and to get the balance, the linkages with the principles in the authoritative text, and basically to make those linkages and just make it more robust, and to tie it in. So with that instruction, members content that we proceed on that basis. So that would be another subject too that we have. Okay, that's good. So thanks for that. Then I think we move on to the next topic, which is 5.2.4, disclosures on unrecognised PP&E, and that's Gwenda. So thanks, Simon.
Yes, thanks, Ian. I'll just share my screen, and I hope that's looking like we're on the right slide. So the board has previously considered this issue where text on disclosures on unrecognised property, plant and equipment, where the basis for non-recognition is measurement difficulties. The board considered this issue in the form of implementation guidance and directed staff to go away and make it authoritative in the form of core text and supporting application guidance, and also asked staff to consider whether or not there was a need for
Gwenda, I think we've lost you. No, we've lost you, Gwenda.
My apologies. I'm not why that's happened.
Do you want to have another go? Gwenda, do you want to have another go? I mean, I think we've got your recommendation and your paper, so unless there's anything else you want to say, I'm happy to open up and for comments from members on this in terms of the way you've addressed the instructions from the board. Okay, so I think as Gwenda's got problems with Wi-Fi, I'll take comments from members on the proposal in the papers. Okay, so I've got a number of hands up. So I'll just take a round of comments again. So Todd, then Lindy, then Patricia, then Lynn, then Scott, please. So Todd, lead us off.
Thanks, Ian. I agree with having this disclosure requirements. I think it is going to be helpful. There was just there are a few editorials which I can pick up with Gwenda offline, but just one thing that I thought was worth mentioning. We talk in a number of places through the material here about things not being able to be measured. And I think we need to add the word reliably in those places where we talk about measurement, because I think it's only where you can't reliably measure something that you would be in this situation. So I think that is an important point to make, and to make sure that the drafting picks up that notion of reliable measurement in all of the relevant places through here.
Thanks, Todd. So go to Lindy next, and then Patricia after that.
Thank you. So I support the disclosure. I have the same comment that Todd had in terms of when you would disclose and what justification. I do disagree that it applies to PPE. I think it should be explicitly only heritage assets. And I know it's acknowledged in the BCs that it's most likely only heritage, but I disagree that we should broaden it to other types or classes of assets. I did question, though, some of the disclosure requirements. I don't know what the difference between significant and nature is, and the intention of C. I don't understand what we mean by that. I think some of the, yeah, let me leave it at that. I think there's some other comments on the drafting, but those were my main comments. Thank you.
Thanks, Lindy. So I go to Patricia next, and then Lynn after that.
And thank you. Specific about the heritage assets, report entity should capitalize subsequent expenditure that it incur or unrecognized assets. I think in this situation, a specific requirements about the disclosure is necessary, and I didn't see this in the draft. We discussed this in September. The necessity of the disclosure is because the value of assets in the financial position statement does not represent the value of the whole capacity of assets, but the only improvement. I think it's necessary to make difference between the whole assets and only improvements, not only in the disclosure, but in the presentation too. Thank you.
Thanks, Patricia. So go to Lynn, then Scott, then Leslie, then Mike.
So I think my comments are similar to Lindy's in particular, but so I agree that there should be disclosure of in terms of these unrecognised assets, but I wasn't clear. I don't think we are clear enough in the drafting in terms of what we expect to see in that disclosure. So I was struggling with what we mean by significance, and is the significance and nature, are they different? Are we expecting a narrative disclosure? Are we expecting any information in terms of why we haven't been able to recognise it, or not just why we haven't been able to recognise it, that's A, but also the sort of, if there's an alternative value that we've rejected, for example, maybe there's an insurance value that we don't want to use. So I wasn't quite clear what we meant and how lengthy we expected these disclosures to be. I felt that there could be a risk of really lengthy narrative disclosures. Is that what we envisage? And it wasn't, I just don't think we're crisp and clear enough in terms of what we mean by significance and nature and what we're expecting to see.
Thanks, Lynn. So go to Scott, then Leslie, then Mike.
Thank you, and I concur with Lindy and Lynn's comments about clarity. I provided a comment earlier about B and C. I really don't know the difference between B and C, but what I wanted to add was actually application guidance G4. I don't know how to actually apply that and how an auditor would actually attest to it. And with my audit background, we really don't like to reference outside the financial statements because however that's done, if it's a link, then the day after the link is put there, the link may not be good. You got all types of audit issues when we're referencing the outside information. And I don't know how you're going to determine other information outside that may be relevant. That's really a broad statement. So I would encourage taking AG4 out.
Thanks, Scott. And I saw support from Mike for that deletion as well. So go to Leslie and then Mike.
Yes, thank you, Chair. I support actually the staff recommendation that there should be disclosures on unrecognized PP&E, and I agree with Todd on the emphasis that emphasis needed on the word reliably. And although the discussion was more on heritage asset, the disclosures actually is applicable also in other PP&E, like for instance, military assets. We have actually some challenges in accounting for military assets. Well, at least in our country, some of the or majority of the military assets are not really acquired through procurement, but they are through um, donations or non-cash transactions. So non-exchange transactions. So there is we have been encountering difficulties in measuring them because there are so varied uh, issues um, that were encountered by the agencies in accounting for this. So maybe we can expound on the other reasons why um, some PP&Es are unrecognized, not only on the maybe on the absence of the reliable measure, but also on other cases, like for instance, in terms of non-exchange transactions. Thank you.
Thank you, Lucy. Over to you, Mike.
Thanks, Chair. So I just wanted to support Lindy's view, and I suppose I'm now going contrary to Lucy's view about military assets, but I would like to see it limited to perhaps heritage. It worries me that some entities may take this as an easy option and say, oh, it's just all too hard, I'm not going to recognize my assets. So I try and limit it in some way, and I thought heritage was a good way to limit it. But even heritage, we want to encourage entities to have a go at trying to find a way to measure rather than just not measure at all. It's all too hard. So those measurement difficulties need to be very clear, and the auditor then will get caught up in making sure that those are, appropriately stated. So that was my only caution. I hear your point about military assets, Lucy. I think in Australia, we gave our Department of Defence 10 years exemption from applying the standard. And after 10 years, guess what? They asked for another 10 years. So, ultimately, you've got to say, no, it's time you started to record these assets.
Thanks. Michelle, go ahead.
Microphone.
You're there. Oh, no.
Does it work? Oh, you can hear me?
Yes.
Okay, I had some problems with my microphone. I quite agree with what Lindy and Mike said about the fact that we should limit the possibility of not reporting on the balance sheet for heritage assets just to heritage assets. But I would suggest that we do it in such a way that there is no doubt that when accounted for, heritage assets are PPE. Otherwise, we will come back to the old problems we have. So we must find a way to have an exclusion which is limited to heritage assets, but which doesn't qualify heritage assets in another category than PPE.
Thanks, Michelle. I think that's quite a neat summary of the kind of concerns that I hear coming through, and that, oh, sorry, Thomas. Thomas, if you can make your point, and then I want to sum up where I think we've got to and propose a way forward on this.
Yeah, thanks, Ian. I just realized that probably it's night over here now because the jalousies are going down, but I hope you can hear me if you can't see me.
Yeah, we can hear you, Thomas, even if the light's going down.
Yeah, it's disaster here. All right. Okay, I just want to say that from the CAG perspective and the discussions we had in the CAG, which were kind of December 16, 17, and June 2019, I can say that I would support the disclosure as it is explained. I think a couple of times we discussed how to react in times or in cases where kind of governments have problems in measuring heritage and what should be the reaction. I think this is kind of what is kind of leading in the right direction and providing information in the public interest. At the same point in time, I think I would support what Lindy kind of introduced as a point to limit it to heritage, because it was explicitly in the context of heritage where we discussed the measurement problems and how we should react on, and not broadly in the PP&E context, because that was not the objective. So kind of keeping in mind what Michelle rightly said, not creating any doubts that heritage might not be PP&E, but limit the disclosure to heritage would be the right way from a CAG perspective as well. Thanks.
So thanks for that, Thomas. So I think, I heard a number of messages, but I think that that this issue is essentially about reliability of measurement, that members don't want this generally, and with the possible exception of Lucy, don't want this to go more broadly than heritage. And so it seems to me that possibly the way forward on this would be that we should tie, rather than having something separate in the core text, that what we should do is actually hang this, because I know we were very keen when we talked through this as a board on the fact that you needed to see core requirement, application guidance, IG as a sort of cascade through, that we do have a very clear requirement for recognition unless there is a problem with reliability of measurement, which is in paragraph 7b in the core text. So actually it would be perfectly possible to use, or to use the text subject to drafting to address concerns of members, essentially not have the bit that you know, is proposed for core text, the paragraphs XX, but to use the material in the application guidance and make it clear in that application guidance that this is responding to the heritage characteristics. So, you know, the generic thing is about reliability of measurement. That's the core guidance. We would not have anything additional in the core guidance. We would move that bit down to the AG guidance and make it clear that this is addressing a heritage. This is addressing heritage issues in the AG guidance. And then I heard certainly concerns about AG4, and I think a strong urge from members that we delete AG4. And then there are some concerns around consistency of drafting. Tom made the point about measure reliably, that we need to make sure that that follows through. And I think that's consistent with driving off that paragraph 7 in the core text. Could I take some comments from members as to whether they see that as a way through, you know, respecting the sorts of points that have been made? I'll take Bernard and then Todd.
Thank you, and thanks to the members for the, I think, quite very valuable comments. I mean, particularly given the history of the project, I think one of the big issues why constituents pushed us for disclosure requirements was actually the question of this general perception that heritage items wouldn't be able to be measured reliably. And I think that kind of flipped a bit in the debate we had, and the board was very confident in expressing that we actually expect heritage items in general to be able to be measured reliably. And given this kind of flow of the debate, I think it's really important that we do not label it as kind of a loophole of not measuring things. I totally agree on that. I get Lucy's points on the military assets, and I think a couple of others as well, where, you know, government entities are a bit hesitant of measuring it. But I would be fine in reducing it to heritage, since it was kind of this kind of disclosure as an option instead of measuring items, which was kind of on the table when we had the debate on the CP. And maybe on also the question of the reliability, I think we can really tie it to the measurement challenges. So really describing why those measurement challenges ultimately really prevented the entity from measuring the item reliably. So I think that would be a good way forward, in my opinion.
Thank you, Bernard. I think that's good to ground us in that debate and the discussions from the task force. So go to Todd and then to Lindy.
Thanks, Ian. I am very comfortable with limiting disclosure to heritage assets. If I understood you rightly, you were suggesting that we didn't need anything in the core text, and I just want to challenge that, because if we are expecting some sort of disclosure, then I think it does need to be in the core text. I don't think we have disclosure requirements sitting outside of core text and any other standards that I can think of. So if we want to make this about a disclosure requirement, I think there needs to be something in the core text around what we're expecting to be disclosed.
Okay, I'll take other comments. I think, Todd, in that I was trying to respond to the limiting it to heritage argument, and that was why I was saying we could potentially bounce off 7B, which is about recognition unless you know, there is a reliability problem. So that was why I was proposing that, but I'll take comments from others to see if anybody else has a different way through. Lindy, and then back to Thomas.
Thank you. So I agree that there should kind of be a high bar that you would have to test against in order to get to this undisclosed, as Bernard said. So we actually do, we do presume that for heritage you would at least attempt to, and it's only after that that you would disclose. So I support that. As long as where we define the characteristics is in the authoritative guidance, so if it's in an AG or in the disclosure requirement that we put in the standard that we say it's for heritage type or PPE with heritage characteristics, that's fine. But it must be part of the authoritative text. So if it's in the AG, okay, or if it's actually in the actual disclosure requirement. And just the other comment, I think in terms of other assets, we've now developed the current service value. We've discussed deemed costs. So I think looking at the model that we've developed, I think we are helping entities that have assets in the public sector that they've been struggling to measure because of the additional guidance that we've put forward. And maybe that's what we can kind of also communicate somewhere, that we actually are addressing the broader measurement issues by bringing these models into play. But we do accept that assets with heritage characteristics might still, there could still be challenges, and that's why it's limited to those.
Thanks, Lindy, and that's probably quite helpful. I should have picked up on Patricia's comment about initial versus subsequent measurements. So it may be that actually we qualify this by this is initial measurements rather than for subsequent. And I see thumbs up for that refinement. So Thomas.
Yeah, just kind of building on the CAC discussions, which I just mentioned earlier, and probably kind of taking Lindy's thought a little bit more forward. I think we have, or you have, all legitimacy to require this disclosure for heritage assets, given all the discussions around kind of problems measuring in this specific area. As reliably measurable is recognition criteria for all assets. If you wouldn't limit it to heritage assets, but leave it to PP&E, I think you need to answer the question why you wouldn't require the same disclosure for all other types of assets, like inventory, like financial assets, like other assets, because then there is no reason really to limit it to PP&E, but it would be a broader requirement in the public interest. But I think you have very good arguments and legitimacy to limit it to heritage, given the discussions we had.
Thanks, Thomas. I mean, I certainly hear the concerns that members are expressing that they don't want this to go wider. And I think that's where, if we treat this as an exception to the requirements in the core text, noting the sort of caution that Todd expressed, I think it's probably better to have it not in the core text, but in the AG, which is still authoritative. I think undoubtedly we're going to need a specific matter for comment about the principle of allowing this and also how we've actually done it going forward. So I think we certainly need that. But I think what I'd propose then as the way forward is that we do drop this down into the AG so that we can limit it to heritage. We would have that SMC which asks both, do people agree that this should be limited to heritage, and how, and the approach to the way we've done it. It is in authoritative text. Then we would need to make sure that we, I think we just need to have a think about Lindy's point about, is there somehow we can relate this to what we've done with deemed cost sort of problems with initial recognition rather than subsequent expenditure, which was Patricia's point. Certainly I'm hearing that we should delete A4. So with that overall direction, are members happy that we proceed on that basis at the moment? we would need to see the drafting back on that, I think, both in terms of the revisions to what staff have proposed, but also how alongside that what goes in the basis for conclusions and how the SMC would be drafted. Todd.
Thanks, Ian. I'm still a bit concerned if it's in the application guidance and there's no hook from the actual standard, because I think when it comes to preparers, they will look at the standard and they'll only drop into application guidance if they don't think they understand something clearly enough from the standard. So if there's no hook from the actual core text in the standard that we actually require a disclosure around heritage, then I think we're going to have a problem in terms of the way that it plays out.
Todd, can I challenge you back on that? Because I think I'm hearing very clearly from members they want to limit this to heritage. And if we have it in the core text, I don't see that we can limit it to heritage because we haven't defined heritage. So we're potentially opening this up to other types of assets. So my suggestion was that the link to the core text is where there is an exception that you can't recognise. So this only kicks in at that point in time. So it's an exception for when you can't reliably measure. And I think the challenge is back if we go with what staff proposed, that comes in as a general, disclosure requirement, and we can't limit it to heritage. That's the challenge that we face.
Why can't we say if heritage assets are not recognised in financial statements, then they make certain disclosures in the core text? I'm confused as to why we can't say that. And if it's a matter of defining heritage assets, we can point them to wherever we explain heritage assets in the material.
Ross, can I go to you on this, please?
I would say we should just look at it when we look at the subject to and come back with a recommendation, Ian. Just I can see where Todd's coming from, but I can also see your point. I think there's two sides to this. So I think you can link it to 7B. And if you say you're not reliably measuring it, you've got a AG that says if you can't reliably measure, you must disclose. But I can also see Todd's point. If I'm thinking through disclosures I need to apply and I don't see anything on it in the core text, it could get missed. So I think there's positives and negatives to both approaches. But since we have to take this away and bring it back anyway, maybe we can bring back a proposal based on a little bit of research.
Okay, I think that's helpful. I mean, I think we know what we're trying to do here. We want something that requires additional disclosures, although I think there's still some work that's required to clarify, which addresses members' comments on this. In terms of, well, what are we asking about? Whether we can get quite as far as Lynn was looking for, I'm not sure, because this is principle-based guidance, so I think we have to leave some latitude. So I think if, Ross, if you can work with that group of members on, this question of, is it, as members have proposed, some members have said, they'd like what is in XX, but they want to limit it to heritage. We have to limit it to heritage, I think. We will need an SMC, which then addresses both the principle of of making these types of disclosures, and also how we've actually addressed it. In any case.
Thank you. That's
okay.
Helpful. To me, that's clear as staff.
Clear for me as well. Thanks.
Good. Okay. Thanks, Gwenda. I was going to come back and ask you whether you were clear on the instruction on the way forward.
Yeah.
Okay. So with that, then we move on to 5.2.5, which is amendments as a result of IPSASB's current and developing literature. And we're back to Amon for this.
Thank you, Mr. Chair. I've just shared the screen. So this agenda item talks to the fact that ED 78 has got linkages with EDs 70 to 79. And these exposure drafts, they propose principles or amendments to IPSAS 17. And since ED 78 is replacing IPSAS 17, we propose that we include these principles that are being proposed in these different exposure drafts. So for example, exposure draft 70, revenue with performance obligation, introduces the performance obligation approach, which also needs to be included in exposure draft in ED 78. So the task force has already included all these amendments or these principles in the core text and application guidance of ED 78. The only amendment that the task force have not included is one proposed from ED 71, revenue without performance obligation. This amendment proposed that the term non-exchange transactions in paragraph 11 of ED 78 be replaced with the term revenue without performance obligations. So the task force rationale for not acting on this amendment or proposal is because the term non-exchange transaction is still relevant in the IPSAS literature and is also relevant to that paragraph which refers to property, plant, and equipment acquired in a non-exchange transaction. So the task force recommends the following principles to be added between the ED 70 to ED 79, except for the amendment from ED 71. Does the IPSASB disagree with the task force recommendation on this as well?
Thanks, Simon, for that introduction. Anybody disagree with the approach being taken, proposed? Lindy.
I'm very negative today, sorry. So I have concerns with including references to proposals from ED 70 to 71 because the comments have closed and we need to consider, the comment period is closed and we need to consider those now. I think we're signaling that we're already accepting that standard. And I don't know if that's something we want to put forward. So I think where the comment or the consultations have closed, we leave it and we deal with that through the consequentials. I think we did agree that when it comes to the conceptual framework, measurement and IPSAS 17, we would try and align, but that's as far as I would go. So I wouldn't even include the leases stuff because again, I think it's a separate project and I think it's, you know, you would have to consider we've already got an existing standard and we don't quite know when, you know, this will be completed. So I would limit it to 75, I don't know the numbers anymore, but to the ones that we're going to issue now and not the leases and not the revenue ones or the expenditure. Thank you.
So I'll go to Ross, I think, for some advice on this, because I think this is a, you know, we've got this all over the place at the moment, and it's how we move this forward.
Yeah, I think basically it's a tough spot to be in with so many EDs moving around because we're trying to be as efficient as possible with showing the impact of those. I think it is up to the board to decide the extent it wants to take this forward. So if it wants to limit it to the directly related projects, I think it could do that. That being said, it could create a problem down the road if we've got open EDs and things we're trying to land and we finished a project that's not quite done because you can't call these consequentials because those are EDs. So I think this was the proposal from staff, but if members aren't comfortable with 70 to 75 being included in this, we can take it away and think about how we'll deal with that once we're landing the guidance. I'm sure there is a solution we can come up with for that, but you know, this was what we'd propose.
I'll ask you a question and then let you think about it, and then I'll go to take Scott. So can we clearly identify these as, potential consequential amendments subject to where we go on these other projects? Because I think I can see a problem with, our constituents quite rightly saying, well, we can't see how all this is going to work in practice, and there's a lot of moving parts. I can equally see the view that says, until we've actually decided where we're going on revenue, you can't fix on something. But then due process wise, if we haven't actually exposed the fact that we're planning something and it's, I just see us caught in a bind here. Scott.
Yeah. I was just kind of thinking out loud here. I totally understand the concept of giving appearance. We've already approved a standard that we haven't even finished deliberating on. I think that could be misinterpreted by our constituents. But does it really matter at the end of the day? Because he says such a long effective date, it gives us time to clean them up at the end anyway. And so is it a way just to communicate to the constituents that's our plans? That we have enough time because of the long implementation date, we're going to fix it. But at this point, this is what we're proposing so they'd understand. I don't know if I'm just looking for a middle ground here.
Thanks, Scott. So I see thumbs up to that. I think we need some sort of pragmatic way of signalling here, even if members are concerned that we don't go ahead of our deliberations on finalising revenue and also leases. But I think we do need something that signals. And so I think there must be some kind of pragmatic middle ground that says these are contingent on how we finalise. Ross, back to you on that.
Yeah, well, kind of thinking it through on the spot, reacting to Scott's comment and others, I think there is a way we can massage the BCs, in particular to highlight those that relate to ongoing projects, and that this is based on where those projects are today. But obviously will be revisited once the board finalizes its thinking and the standards related to those, and appropriate changes will be flowed through. As Scott said, they will have long implementation dates. We're probably talking 2025, 2026 at this point, by the time we finalize all of this.
Thanks. So and I see thumbs up on that. So go to Lindy.
A comment then, because it's not just because we have, because of the changes we made to ED 71, you'd have to include both ED 70 and 71, because it could be a non-exchange transaction. So yeah, just have to relook at that as well.
Okay, well, I think the principle that we're trying to articulate is this is something which is a consequence of the fact that we have the revenue standards up for redeliberation, and we need to flag that. But I think we need a pragmatic way forward on this, because I don't think it's right from a public interest perspective that you proceed as though these projects are not going forward. So I think we have to have something that signals clearly that if these projects proceed in the way we proposed, subject to analysis and comments, these changes would happen. And we don't want to rule them out. Equally, if we have to, make amendments, it's fair that that would happen as a result of that process. So I think we need a way forward that signals that there would be, there are impacts. Okay, I'll take final comments from Lynn, David, and Mike, and then I'm going to move us on.
Thanks, Ian. So I was with Lindy really on this, but I can see that there is a pragmatic way forward. When we're taking that way forward, can we also look then at the BCN commentary around the non-exchange transactions, just to be clear that when you might have a non-exchange transaction that is outside of the scope of, in effect, the revenue standards, I would be in this PPE standard. So I guess it's a scenario of a contribution from owner towards an item of PPE. Because what I wouldn't want us to do is inadvertently, in the way we've described things here, get people confused on what we've already said in ED 70 and 71. So I guess if we are going to refer to those EDs, we need to refer both to ED 70 and 71 and explain non-exchange transactions that aren't in the scope of those that are relevant to this ED.
Yeah, I think we respect that, Lynn, and I think we have to see how we do that without getting into too much detail, because we do have non-exchange transactions as a term of art, if you like, referred to in the conceptual framework and in the, particularly the preface to the conceptual framework. So I think we just need to be careful about not digging ourselves into other holes in doing that. So I think that's the instruction to staff on that. David, Mike, I'll take a final comment from Lindy, and then I am going to move this on because I think we have a way forward on this. So, David.
Thank you, Chair. I mean, I just wanted to draw the board's attention to Table 1 in the paper, because if we're looking at Table 1, the only two EDs that I see that might cause us an issue that staff will need to look at are ED 70 and 75, because the rest are either related to this project or the table says it's not applicable.
Thanks for reminding us on that, David. So I'll take Mike and Lindy and then we'll move on.
So thanks, Chair. I just wanted to support your approach on this. I mean, if we issue this ED today, say, then that's the most recent thinking of the board, and we're expressing it as of our thinking today. That may change as we get responses to other EDs. So I think we just need to take the view that you've expressed. This is our situation. This is the circumstance we are in today. This is what we believe, and we should stick to that. But make it clear that things can change as we get responses to EDs.
Thanks, Mike. So Lindy, final comment.
Thank you. And in terms of proposing a middle road, what we did in the leases is we had a footnote to contract where we said the definition might change because of ED 70, I don't know which one, ED on revenue with performance obligations. So maybe what we do, for example, where we just leave IPSAS 9 in the core text, but we have a footnote that acknowledges that this reference might change based on the considerations on those consultations. So you bring it in indirectly, because that's already what we've done in the leases standards. So then we're being consistent. Thank you.
Thanks, Lindy. I think that's helpful. Okay, so I think we know what we want here. We want a sort of pragmatic approach to how we do this. Lindy's referenced the approach we proposed in leases. So I think with that, we need a way of identifying the consequentials which relate to those other projects in progress. We need to highlight those for our constituents so that they see that there's something that will potentially change, but as Mike says, that's based on our current thinking and it's subject to evolution. So Ross, I think if you can work with staff so that we get that clarity through on that. Yeah. Okay, so I suspect that we're going to have a similar debate on the impact on effective dates, but I'd quite like to get through that one before we take a break. So Amon, please introduce that.
Okay. Sorry. I'll sort that out quickly. We are now on agenda item 5.2.6, which is the impact on effective date of draft ED 78 as a result of the linkages with the IPSASB's current and developing literature. As mentioned earlier, we've got this developing literature, and these principles will be included in ED 78 to reflect the recent IPSAS board thinking. As a result, staff recommends that the effective date in draft ED 78 should be on or after the effective dates of the final IPSAS based on ED 70 and ED 75. If we're looking now, re-looking at the table 1 that we've just mentioned. So that is what the staff is recommending. And does the IPSAS board disagree with its staff recommendation?
So thanks, Simon, for that. Okay. So I'm not seeing anybody disagreeing with staff recommendation on that. Okay. Good. So with that, I think we take a break. So we break for 10 minutes. We're at 1/2 the hour. So back at 22, please, and then we'll go into the discussion on the potential revision to IPSAS 31. Okay, and David will keep time as ever.
1 minute.
Thank you, David. Okay, so welcome back, everyone. Let's wait for a few more members to come back online. Okay, that's good. So at this stage, I have, in terms of what we've talked through so far today, I've got 5 subject to areas. The back to 5.2.2, there's the fair value basis for conclusion, but also the specific matter for comment on that one. There's also a sort of smaller one, which is Lucy's point on that. On 5.2.3, there are some further drafting changes that are required to clarify the implementation guidance and to tie that more directly into the core principles. There is one on the disclosures on unrecognised PP&E, where we need to resolve that question about how we achieve the limitation for heritage, whether it's in the core text or in the AG. And then we have the one which is actually how we address the amendments with a pragmatic way forward on that. Okay, so with that, Gwenda, we move on to the proposal to amend IPSAS 31 for consistency.
Thank you, Ian. And I'll share the screen for this this presentation. I hope now you can see the slide for 527, where what staff and the task force, it's a recommendation from both, what we're proposing is that as a consequential revision from ED 78, that the present heritage scope exclusion clause that is in presently IPSAS 31 dealing with intangible assets, that be revised and removed, along with a description that's presently in IPSAS 31 about the meaning of what heritage intangibles are. That description has just been moved across originally from IPSAS 17, as has the scope exclusion, and then to add a basis for conclusions to explain that this change arose from the project dealing with property, plant and equipment. And those changes are shown in Appendix A. And so staff and the task force are asking whether the board members disagree with what the task force is recommending. Thank you. I'll just...
Thanks, Gwenda. Anybody disagree with proposals on that? Yeah, Camira.
Thanks, Chair. I generally agree with the proposal of removing this scope exclusion, but I will suggest to maintain the paragraph 12, 13, 14, and 15. And in case of paragraph 15, just maybe change wording to include something like entities when recognizing intangible heritage assets are required to, and then continue with the text. Because I do think that this paragraph offers important information to clarify what intangible assets are in terms of heritage assets. So thanks.
Thanks, Camira. Todd, you were supporting what Camira was saying.
Yeah, I was. Exactly the point that I was going to make. Thank you.
Okay, thanks. And I see Lynn supporting that as well. Lindy, to you.
And I agree and support the interventions made. I think the other thing we must also include are the disclosures of unrecognized heritage, intangible assets as a consequential as well. So just those disclosures or whatever we do in IPSAS 17 would also be relevant in IPSAS 31. Thanks.
Okay, so I see support for that. I think we need to be careful not to move too many things, but it certainly seems that, I mean, that is a heritage issue, heritage-specific issue. But, so I see support for retention. I think, was it paragraphs 12, 13, 14? And I think, Camira, you mentioned some suggested
15.
Okay.
15 as well, yeah.
And there may be a little bit of tidying up on that.
Yes.
Then also the point that Lindy made with regard to anything unrecognised. So if that can come back linked to the resolution of that that issue, the main for ED 78.
Yes.
Okay, so I think, Gwenda, with those amendments, we're content to make that consequential.
Excellent. That's good to know, and very clear instructions going forward.
Okay, thanks very much. So, Dave, I think that takes us back to you.
So, Ian, a question from me. Do we want to take all the SMCs as one, or should I go through them one by one?
I think if we take them together and take comments on those, clearly we've got a couple of extra SMCs that we've accumulated as we've gone through this morning, which will be on fair value and also the asset management plan based, I think, approach.
Okay, then I propose I don't need to put up any slides, Ian. I can just start taking comments on the SMCs as noted in the papers.
Okay, thanks, Dave. So any additional comments from members? Yep, so I've got Mike and then Lynn.
Thank you, Chair. So thank you, Dave. The only comment I had was, as you finalise the SMCs for ED 76 and 77, can you just make sure that there's no consequentials or there's no things that we need to make sure are consistent between the three EDs?
Thanks, Mike. And I think that's a general, I mean, there is going to be a general tidy up that staff need to do to make sure that, you know, decisions that we make and the finalisation of the other standards, that they're then consistent across the suite. So I think we will need to see anything back on that of a substantive nature that can't be dealt with through the drafting process, sorry, the editorial process. Lynn and then Lindy.
My comments were on SMC 1 and SMC 3, and the way they're currently drafted, I fear we're going to get a repeat of consultation comments we've already had. Whereas what I think we actually should be asking is whether or not there's any characteristics that present complexities that require or should be answered in core text application guidance or implementation guidance, i.e. within an IPSAS, not more broadly within guidance. Because otherwise I do feel we're going to just get generic answers around here's loads of complexities, which we probably already considered.
Thanks, Lynn. I think that's a good point, that we need to make sure, given the direction we've set, we don't get just sort of repeats of people's disagreement with that. Okay, so Linda, you're agreeing on that. Did you want to add anything further?
I do, thank you. And it's on SMC 2 and 4, so it's in the similar vein. We did ask what the issues were, we agreed what the issues were, and now we're asking again if we've addressed the issues in the implementation guidance. And I would rather suggest we say, does the implementation, is it sufficient, does it address the question, rather, not do we have any, is there anything else you want us to look at?
Thanks, Linda. Yes, I agree. I think that's consistent with the tenor of Lynn's comments, that we need to, the story has moved on here. It's how have we done it, rather than, yeah. Okay. Other points then? Okay, so I think that we are okay on that, but those are two, those impact. Therefore, Lynn's comments are on 1 and 3, Lindy's are on 2 and 4, and those are really important to get those right. Okay, Dave. So back to you then. So take us through then the changes in the, or move us towards finalisation. Over to you.
So the last slide, Ian, is approval. Can I go to that? Okay. So the last item of this session, and Ian just outlined 5 subject 2s, but staff has followed due process in preparing this document. We've managed a few projects together in developing ED 78, specifically heritage, infrastructure, and measurement, and taken all the IPSASB's decisions and put them into ED 78. We have applied various task forces throughout and consulted the CAG as necessary. So at this point, staff is recommending, subject to the issues that the IPSASB has identified today, that the IPSASB approve ED 78 property, plant, and equipment for a 4-month exposure period that will be released at the same time as the other suite of standards that are related to this project.
Thanks, Dave. Can we hold the discussion of the exposure period? I'd like to pick that up as a discussion in the round about ED 76, 77, 78, and 79, and we'll do that on Thursday if that's okay with people. So the question is, obviously we'll come back to that period, but are people content to move forward to approval subject to those 5 items that we've identified where we need a substantive paper back from staff? Lindy.
So just a question, we did submit comments on drafting. So would that still be considered by staff going forward, or?
So this, like all the EDs we're looking to approve this week, will go through the normal editorial process that will continue throughout the week, as well as after we approve, to make sure drafting's picked up. And the board will have a chance to look at the ED next Tuesday with the subject 2s, and we'll try and pick up drafting that we can, but we will focus on the substantive points that have been discussed today.
Okay. Thanks, Mike.
Thanks, Chair. So I was going to have the same question as just been asked, so thank you for the answer. But I just had one question on paragraph 13, where we introduced the term deemed cost. And I can't recall, did we decide we needed to define that in some sort of way, or we're just going to be silent? I mean, I would prefer it if it was defined, but if it's already been discussed and decided, then I'll back out.
So I think that's cross-reference into 77, isn't it, Dave? But back to you on that.
Yeah, so Mike, you'll have to let me look into this. That paragraph is, there's a few points in that paragraph that we did address. I just can't remember how it all works together. So let me come back to you and explain what we're going to do, and I'll come back to the board at some point this week and let you know whether we're going to define the way forward.
Okay, thanks, Mike. Lynn?
Yeah, my point was similar to Mike. So maybe when you're looking at that, Dave, mine was on paragraph 11 as well as 13. And I think that ED7, the measurement ED and this ED are not absolutely consistent about initial measurement. This ED is not referring at all to transaction price, and it launches straight into deemed cost. It doesn't cover necessarily fair value. So some of the things we put into the measurement standard haven't come across to this standard in this initial measurement part.
Dave, do you want to pick that up? Because I think there is a question as to how much, you know, in looking at this, the question is how much is dealt with in 77 and how much is dealt with here? Because if we dealt with stuff in 77, then we don't want to be repeating that here. Ross?
Thanks. I just want to highlight that deemed cost is a defined term in IPSAS 33. So I don't think there's a need to redefine it here. We might just need to reference into IPSAS 33 where it is defined.
I mean, I think, you know, the point is we do need to look at consistency. There's no doubt about it. You're right on that, Lynn. And I think, you know, then there is a question about the, you know, cross-referencing so that it's useful, but it doesn't contradict and risk contradicting anything that's in another standard. So I think if we leave that with staff, I think this is at the margin, but I think you're right, we do need to make sure that we look at those cross-references and that consistency, but we need everything to have settled. And I think that's a general subject too that would remain after this week during that finalisation stage. Yeah, David.
Thanks, Ian. I was just thinking that under subsequent measurement in ED 78, we have got a paragraph in there that refers people to ED 77. So maybe we just need to do the same here and think about deleting the offending paragraph 11 and replacing it with a reference to ED 77.
Thanks, David. I think that's a possible solution, but I think we're going to need to just sit back and say, right, okay, have we got anything else like that? And make sure that we don't lose anything if we take that approach. But again, that is, you know, that's actually seeing both 77 and 78 alongside each other to make sure that we've got the guidance in one place and we've got the cross-reference so we don't inadvertently contradict costs. So I think that's an overall caveat. Patricia.
Thank you. I think it's necessary to decide about the modification in ED 77 to review again the ED 78. But my question is other. Will the previous BCs be combined with the new BCs? I didn't understand the approach in relation to BCs, because I understand that the draft you substitute the IPSAS 17. In this case, it's necessary to combine the previous BCs and the new BCs.
Dave, can you come back on that, please?
So Patricia, the way that the BCs are presented in the ED that you have is the way that we propose going forward with the BCs.
I'm sorry, could you repeat, please?
But I think Patricia's point is that there were BCs in IPSAS 17 and she was expecting to see those coming forward so that we have a complete set of BCs. So, you know, we obviously have BCs on the new material, but do we have a complete set of BCs? Ross, do you want to pick that one?
Yeah, just to follow on Dave, I think the proposal is to take it forward with the BCs that we have in this document. IPSAS 17 will remain in the literature until this standard becomes effective, as will the BCs. So I'm not sure there's much need to bring them forward. If there's specific BCs, Patricia, that you really think we should bring forward, if you flag those, we can consider, or if the board wants us to do that work, we can do it, but
Mike, you on this?
Yeah, so Ross, we had a discussion last week about the BCs in the conceptual framework, and we agreed on how they should be dealt with in terms of the BCs that were no longer relevant, or somehow to, you know, I think we need to be consistent. Whatever we do there, we should do here. I think Patricia makes a good point. There's a need to make sure we're consistent, as Ian has said a couple of times.
So I think that point is well made. I think if staff can take that away and bring over the BCs or an edited version of the BCs from 17, IPSAS 17, that would remain relevant. I think that is a point consistently, and I'm sure we've met this. I think we've got this issue on IPSAS on ED 71 as well, based on IPSAS 23. That, you know, where there is a thought process or a you know, discussion which remains relevant in terms of material that's in a current standard, that we should have that so that constituents have the complete picture. So if you can come back with that. So that's an additional subject too, but I think that's a general request now across the literature.
noted.
Okay, thanks Patricia for picking that one up. Okay, so with that, I think we're through. And I'm going to propose that we have that list of subject twos. We need specific recommendations back from staff, but otherwise I'm going to propose that we move to approve subject two. Ross, can you take us through the process?
Yes, thank you. So as I outlined at the beginning of the meeting, first, I'd like to ask if anybody member would like to vote against the ED, approval of the ED, subject to all of the issues that we've discussed today that we'll bring back next Tuesday. So I note one vote against.
Sorry, I'm not voting against. I did drop off because of my internet connection. Just wanted to check on exactly where we've got to. Have we done a page by page already that I missed, or?
So we did the detailed page by page back in September to highlight the issues that we were bringing back for discussion today.
Okay, because I've got some comments that may be editorial, but I'm not sure whether they are, and can be picked up through an editorial process. So is this subject to that process as well?
All EDs and pronouncements we approve now are always subject to the editorials process.
Right, thank you.
Okay, thanks for that clarification. So then, Ross, take us back into the process.
So again, subject to the papers that were agreed today that would back next Tuesday, we're asking for the vote. So I'm going to start first with anyone who votes against. Please raise your hand if you'd like to vote against the ED. And I'm not noting any raised hands, so there are no votes against. Second, is there anyone who'd like to abstain? If so, please raise your hand. And I'm not noting any votes against, or sorry, abstentions. And then lastly, if you do vote for the pronouncement, you just have to remain silent. And I'm not seeing any raised hands. And today we have 16 members present. Absent are James Jung and Nima. So that's 16 votes for, 0 abstentions, 0 against, 2 absent.
Thanks, Ross. So can we circulate a list of the the subject twos for confirmation that we've got the complete list of subject twos, and then we expect to see papers back addressing that, or you know, as appropriate updated, draft reflecting drafting changes and so on. We just need to walk through.
So we can circulate the list of subject twos. We'll try and get that by the end of today, so members can reflect on that, and we'll start work immediately so that we can circulate papers within a couple days with the write-ups in subject twos and the corresponding amendments to the exposure draft.
Okay, and then that will come back in time for us to go through that on Tuesday next week.
Yeah, I haven't talked to staff on this yet, but I would assume we're aiming for Friday so that we give it to members before the weekend.
Okay, thanks. I think we need time to make sure we've rinsed through all the issues appropriately. And staff will work with members in the meantime on the various specific issues. Good, okay. So with that, we are through 78 for the time being, and then we move on to ED 75 on leases. And in terms of today's session, we're going to focus on the material in terms of ED 75. We will not look at, if we get to this stage, anything on the request for information, either in terms of the papers or the drafting. We will pick that up tomorrow. So we're just moving through ED 75 as far as we can get today. So with that, João, over to you.
Yes, thank you, Ian, and good morning, good afternoon, and good evening, everyone. So bear with me while I'm going to share my screen. Does everyone see my screen?
Yes.
Okay, thank you for the confirmation. So agenda item 6, leases, and before proceeding with the technical agenda item, staff and the task force chair thought it would be useful to provide a report back on the work done by the task force in this quarter. So, and with this, I'll pass over to Mike as a task force chair to make this report back to the board. Thank you.
Thanks, Sean. Hello, everybody. So the second slide that you've got up now tells you what we were doing over this period. So the task force and the task force members and the request for information group are listed on the left-hand side of the slide. And thanks to those task force members and especially those that are not here for their input. So the first meeting we had was to finalize the request for information, which we've done, and that's in your papers for discussion tomorrow. The second phone hookup or Zoom hookup dealt with the instructions that we got from the board at the September meeting, and they were to look at the addition of the word service potential in AG 10, and to do so in the context of the question of control of an asset and definition of a lease. So João will go through those papers shortly. We were also asked to look at the fair value definition, and should the fair value definition remain in line with the previous standard or not, or be updated, because we've been discussing it and changing it through the work we're doing on measurement. We were asked to update the BCs, which we've done, and we were asked to then consider SMCs, which we've done. So I suppose, Chair, that's what the task force did, and the papers that you've got for discussion today are therefore headed up task force and staff recommendation, because we reached agreement in the task force to the proposals and the papers that you've got today. Thank you, João.
Thanks, Mike.
Okay. Thank you, Mike. Ian, do you want to say something? No.
No, I think
Okay.
move into the first item. I thought the summary was clear from Mike.
Okay. Thank you for the confirmation. So moving to the first technical agenda item, 6.21, on the usage of the economic benefits and the service potential when identifying a lease. So as it has been practice in this meeting, so I'm taking that the board read the papers, so I'll be focusing on the recommendation and the reasons for the recommendation. So this was a very much discussed issue during this last quarter within staff, task force and task force chair. And everyone reached to the conclusion not to add the service potential wording in paragraph AG10 when identifying a lease for basically these two main reasons: that ED75 is aligned with IFRS 16, including the definition of a lease, which is based on the cash flows and economic benefits. And the second major reason is related to identifying the rights transferred in the lease contract are independent on how the lessee exercises those rights going forward, as the lessee gains the ability or the right to control the level of economic benefits related to the asset and its use. So basically, in other words, adding service potential is not relevant to identify the transaction as a lease when taken together with the other two rights, the economic benefits and the right of use, or on its own right because of how a lease is defined. So without taking much longer, just to illustrate that staff brings draft BCs explaining the conceptual thinking behind this decision if the board decides to go forward. And of course, they are quite lengthy and they might be trimmed according to the board's discussion and the decision. So I ask the board if the IPSASB disagree with the recommendation from the staff and the task force. Thank you.
Thanks for the introduction, Joe. So open up for comments from members. Yeah, Mike, you wanted to come in, and then Todd.
Yeah, thanks, Chair. Just before we get comments from other board members, because obviously the task force looked at this, I would just remind board members that the standard we're dealing with is dealing with commercial leases rather than leases that may not be commercial in nature. And I suppose the reference to economic benefits is important in that context, because the lessee may be entering into a commercial contract, a commercial lease of some sort, but that doesn't mean the lessee is going to use the asset for commercial purposes. They may well be using the asset for service potential. So just that context, I think, would be helpful.
Thanks, Mike. Yeah, I think we do need to focus on the fact this is the standard about the financing rather than the accounting for the asset. So Todd, then Kamira, then Mark, then Thomas.
I disagree with the staff recommendation, and I think I've certainly expressed my views in previous meetings on this. But for me, a lot of this comes down to the credibility of our standard as a public sector standard. And I think there are places in the application guidance that have been highlighted, and it's not every instance where economic benefits are used, but there are a number of instances where it just makes sense to me to acknowledge that the lessee could be entering into this lease contract. I appreciate it's a commercial contract, but they're entering into it with the intention that the right to use the asset that they are gaining is because they are interested in the service potential of that asset, not any economic benefits that they're going to derive from it. So, I mean, I could go through every time that economic benefits is used and point out the ones where I think and service potential should be added. And it's probably about half or just over half of the references that have been identified in the application guidance. But I feel quite strongly that we do need to actually acknowledge the service potential issue.
Thanks, Todd. So go to Camilla, then Mark, then Thomas.
Thanks, Chair. Well, I also disagree with the recommendation of the staff. I do consider, after reading the arguments in favor and against, I think it is important to acknowledge the service potential included, because I don't see, for instance, in the arguments against, I don't understand what is the third criterion, or yeah, and I also think we are maybe, when explaining these arguments, we are mixing the perspective from the lessor and the lessee. But in any case, I think it's important. Only having alignment with IFRS 16 is not enough argument not to add service potential. So I think it's important for the public sector. So thanks.
Thanks, Camilla. Mark, and then Thomas.
I agree with the task force recommendation. I see that there is generally a need to acknowledge the service potential. However, I ask myself, does it change anything if we don't put it in there because we want to align with IFRS? And the key is, I think it's still talking about the contract and define a contract. And the question is, what does the lessee obtain? And the contract says, it obtains substantially all of the economic benefits. So the question is there a contract, or can we imagine a contract where you convey the economic benefits but not the service potential at the same time? And this is very difficult for me to imagine, because this would then mean the lessor would still keep the service potential but convey the economic benefits, but this is not possible because there's a rivalry in the good. You cannot use it twice. So I just cannot see in practice any case where there would be a leased asset which is used for service potential, which would not be covered with this definition, which just puts economic benefits. So I think it goes a little bit in the direction of how staff has argued. So while it's maybe not very beautiful not to have service potential, I also ask myself, if we put in service potential, are we then still an alignment project which we actually decided, or would there be public, or could we also say this is a public sector issue that warrants departure? So in case, just to make sure that we can keep track of our decision, and because I don't think that there are consequences of not including it, I agreed with the task force recommendation.
Thanks, Mark. So go to Thomas and then to David.
Yeah, thanks, Ian. The CAG discussed the leases twice in December 16, December 18. And from kind of broader discussions, I think the CAG had, I would probably find it a little bit problematic. I think on one side, the CAG was always insisting in keeping aligned standards as close as possible with IFRS in order to avoid confusions. On the other side, in other contexts, the CAG was always recommending to be consistent with the conceptual framework. And even if we're kind of talking about financing here, the focus point of a lease contract is always the asset. And therefore, the definition of an asset in the conceptual framework should be the basis here as well. I would find it problematic, to be honest, to preclude the intention of the lessee for entering into a lease contract and to say in most cases it is for commercial purposes and the lessee would not be interested in the service potential. I don't think that is a conceptual good enough argument for that.
Thanks, Thomas. David.
Well, I must admit, I agree with Todd's comment that when I read it, I thought there will be circumstances, quite often I should think, where the lessee is going into a full commercial transaction where the asset is going to be used for, not for its economic benefits, but for its service potential. So I agree with Todd that there are cases, and I think I probably agree with him roughly on the number of instances as well, where the service potential is relevant. There are cases where it's to do with the lessor when service potential is not relevant. I think the other issue I would like to raise, which doesn't need to be discussed now, but that is the concept of what does alignment with IFRS mean. I thought we could adjust an IFRS for the public sector circumstances where we deemed it necessary to do so. Not that alignment means that we have to slavishly copy everything in the IFRS itself. So I think that perhaps staff and the board need to think about that in a little bit more.
Thanks, David. And I see support for that. I think probably, you know, we do have a range of views here, you know, for good reasons. But I think probably we need some shades of grey, if you like, rather than this is a black and white issue. It does seem to me that, you know, there is a possible way through here, which actually would acknowledge both positions, which is that we do need to recognise this issue and its potential impact on the classification of transactions in the application guidance. And that doesn't necessarily, you know, mean changing every reference, but it does mean potentially adding a clear statement that this can happen, and therefore in those cases we're not precluding, you know, we recognise that service potential is relevant. Mike, I'm going to pass back to you at that stage, you know, in terms of that sort of approach as a way through on this, because I think we do have that range of views, and it seems to me that putting in some sort of emphasis, some sort of explanation shouldn't offend it, you know, those that don't believe it's necessary.
Yeah, so I think, thanks, Ian. I think some sort of explanation is needed in the circumstances. I think the board members shouldn't think that the task force and staff have slavishly, you know, done what you may be suggesting, David, because other changes have been made to the draft. We've changed, for example, some of the examples to make them more public sector specific. So the task force wasn't, you know, saying we're just not willing to change at all. But I hear the arguments, Ian, and I think maybe an SMC also would be helpful, but let's have some text that just can clarify what you've described.
Thanks, Mike. Scott, you want to come in?
Yeah, relative to Mike's comment, I agree with you, Mike. I think you have made some changes, but I think it's just a tone in the BCs, the way it's written. It appears to be, and I appreciate David's comment, it appears we always lead with the most important thing seems to be alignment with 16. And I think there's some strong conceptual reasons for why we did what we did. And I think we ought to lead with that and come back with the 16. So I think it's a matter of tone and reference in here more than probably anything else, Mike, from that perspective. But I think we always lead with the line. It's so important to get alignment. And I think there's conceptual reasons for what we did. And I think we ought to lead with those.
Thanks, Scott. And I think that probably does come back to the fact that we were quite careful about how we worded the basis for conclusions, which explained the debate that the board had back in March. And I think we need to retain that sense of that rather nuanced approach rather than alignment or bust. So I think if we can, you know, instruct staff to review the drafting, and I certainly, when I read it, I shared your concerns, Scott, about the fact that we were leading with alignment, whereas I felt there were other reasons which were probably stronger. Lynn, grateful if you can comment on the proposed way forward that I've suggested.
Yeah, I just wanted to be clear, because there's a number of ways you could address it within the proposed way forward. And I think Todd had put forward to actually introduce the word service potential at a number of points in the core text. And I guess it would be helpful to understand if that is what the board is wanting done explicitly, or is it an explanation in the BCs and around the edges? And I'm not sure that I've heard which it is clearly enough. Okay, so that's the other thing to say, you know. But
Sorry,
are we putting,
to come back on
putting
I think what I was proposing was actually that it was something in the application guidance that gave you that clarity. So I was proposing a sort of middle way through rather than changing all the references to include economic benefits and service potential, because I think that becomes incredibly cumbersome and it really is, you know, potentially a sledgehammer to crack this particular nut. Todd.
As I understand it, there are less than 20 references to economic benefits in the entire standard, and they're all within about 10 to 15 paragraphs in the application guidance itself. So that's what we're talking about, a number of paragraphs in the application guidance that refer to economic benefits. So it's not affecting the core standard, it's just acknowledging in the application guidance as appropriate where we're referring to economic benefits from the lessee perspective, it could be, or service potential.
Thanks, Todd. And I think so I think what I was proposing was that we had an explicit statement that effectively ensured that people read economic benefits, including reference to service potential, wherever that came up, so to address that without necessarily having to change every single reference. And therefore that would come in the application guidance because it would be an application issue of the main principle. Mike, back on that?
Yeah, so I'm trying to find a middle way here. I hear what Todd's saying, but I also hear what Mark's saying, and the task force recommended we don't add to its service potential. So if we can't get agreement amongst the board, then I think some sort of statement in the AGs to clarify that. But then you've got to be careful because, as Todd says, not every place would you add the word service potential. So the wording of that's going to have to be quite clear. And I've been through the same exercise, and there's somewhere you wouldn't want to add service potential. So I think to respect what Mark said and others have said, we need to maybe just have some sentence that clarifies why we think the word service potential would be suitable in certain cases.
Ross.
So I think it's a good discussion, and I'm happy to hear the different sides of this. We'd have to take it away and look at it, but if the board will permit it, I think we should consider whether we can do it with one statement, given the point that Mike's made, or whether we need to do it for the specific references when we're talking about the lessee's use of an asset, because it is very specific to how the lessee uses the asset, which is why it won't work in all instances. So if we are going to add it, there's probably 7 or 8 references where you'd want to include it. And I don't think it'd be that onerous for us to do. It's probably easier than a blanket statement where it might not work in all instances and be confusing. So, but before we take that away, I do want agreement from the board that that's how they'd like us to look at this and take the changes forward.
So I think, if you like, summarising where we've got to, we have divergences of views clearly from a sort of public sector constituent point of view. People want to acknowledge service potential, and that we need to do that in the AGs. The question then is a discussion about whether we change those 7 or 8 references to become economic benefits and service potential, or whether we have a blanket statement to do that. With that subject to our members happy to proceed, and that, you know, staff to come back with a recommendation of which of those 2 we deal with, we take. Are members happy that we move forward on that basis? Okay. So I'm getting thumbs up from the board on that. So João, you clear what the ask is there from the board?
Yes, I was going to ask just to confirm if we have those 2 options to come to the board, and I got that from you now. Thank you.
Yeah. Okay, that's good. So I think we have that as our first subject 2 on leases. So move us on to the discussion about fair value, Joao.
Yeah, thank you to the board for the very useful discussion. So bear with me. Do you all see the slide? Yeah. Okay, moving to the following agenda item 6.22 about the fair value definition. Once again, I take the issues paper as read, and I'll focus on the staff and task force recommendation. This was another instruction from the board from the September meeting, the second one. And after much discussion, staff and the task force recommend to retain the IPSAS 13 fair value definition, basically for these 4 reasons. It is consistent with IPSASB's March 2020 decision to retain IPSAS 13 lessor requirements to align with the IFRS 16. It is also consistent with IASB's decision to retain in IFRS 16 the fair value definition that existed in IS 17, from which IPSAS 13 was drawn. On a separate perspective, and based on the research that we did on this decision from the IASB, also when developing their IFRS 13 standard and IFRS 16, and also with the impact in our projects on measurement, what we found that applying IFRS 13 fair value definition in ED 75 would lead to different measurement values, basically in gains and losses in sale and leasebacks, about the timing of the recognition of those gains and losses, and also on the classification of leases. That would lead to a completely different accounting. As we know, when we have operating lease and finance lease, the accounting is completely different. And in the end, it is also consistent after discussing with the staff that is leading the measurement project for the decision that to scope out leases from the ED 77, which is also consistent with a scoping out of leases from IFRS 13. So based on these reasons, I ask the IPSASB whether it disagrees with staff and task force recommendation. Thank you.
Okay, so open up for board members to comment. Thomas, you've got your flag up.
Yeah, thanks, Ian. Just to kind of remember board members of the different positions of the CAG regarding this point, probably not incredibly helpful in making a final decision, but just bring those to your attention again. I think on one side, the CAG, when discussing leases, was encouraging the board to stay as close as possible to IFRS 16, as there were no good enough reasons from a public sector perspective to deviate. But on the other side, when discussing fair value, the CAG was always of the opinion that if kind of the board would use the term fair value, it should use this term in the context and the meaning of IFRS 13. So we have kind of the conflicting position of the CAG here, looking from different perspectives. Just the last remark in paragraph 5, kind of using the argument that the IASB wasn't really sure what the significant changes would be and therefore left it like it is, would mean from a public interest perspective and the stakeholder perspective that the uncertainty is just transferred to preparers. I'm not so sure whether that is a good approach to follow. Thanks.
Thanks, Thomas. I mean, I'm not seeing any flags raised. Ross.
I was just going to say, Thomas has probably summarized what we've talked about from the staff and the task force. And again, our thinking was if the ISB hasn't amended its own standards for IFRS 13, it's probably better to leave the definition consistent with IPSAS 13, as it's more consistent with the board's conceptual thinking to retain the lessor model. So I don't think there's a clear way on this, but this seems like the right approach, because I don't think it makes sense for us to be fixing an ISB standard for an issue they haven't dealt with.
Thanks, Ross. I mean, I think this is a problem we've had, frankly, all the way through this is, I think really where ISB landed on lessor accounting was unsatisfactory. I mean, that's why we issued ED 64. And I think there is a clear argument here that, basically, it's around sort of, well, we're proposing that model, so therefore we shouldn't change the requirement. I think there is possibly, it's an area where we, I think, have probably done further thinking on this, because actually, the definition is not a million miles away from what we're now calling market value, and therefore actually is an approach to determining fair value. So there's probably some semantics here. It does seem to me, though, that this is probably something where we should actually ask for input from constituents, because I think, and we probably just need to reflect on this and make sure it is clear in the basis for conclusions. There is the contrary argument that Thomas has put, and particularly given the timing, we're proposing to bring in the fair value definition as in IFRS 13. We've also got fair value very much embedded in our financial instruments standard, which is of course up to date with the ISB's literature. So there is this legitimate point of view. So I think we should ask a specific matter for comment on this. But I think the summary from the board is that they're content to go with the retention of the existing fair value definition for the reasons that João has outlined. Okay. Thanks for that. Mike, back to you.
Yeah, thank you, Chair. So I'm not hearing any pushback from board members on what's been recommended, but I think your point's valid. In any case, I think the messaging is going to have to be clear that we may end up with different definitions of fair value. So an SMC would be helpful, I think.
Thanks, Mike. Okay, so João, move us on to the next item.
Yes, thank you, Ian, and thank you, the board, for the very useful discussion. So bear with me while I share the screen. Moving now to a more logistics on the developing exposure draft. So agenda item 6.2.3 on the development of ED 75. So as instructed by the board at September meeting, so what staff did was to accept that the markup changes that the board agreed back in September, and bring a new marked up version only with the changes made between September and the December. So the exposure draft that it is in front of you reflecting marked up all those changes. I'm just going to focus on three major items or areas of that ED. The first one is on the basis for conclusions. So where the staff and the task force reviewed the updated BCs, not only the editorials updated, but also the new BCs that come in only related to the exposure draft 75 development, so it is also there. Of course, those BCs will need to be amended according to the board's decision, to the subject to the issues paper that I'll bring later on the service potential. So my first question to the board before going to the second and the third is, Ian, if the board is happy. And of course, I have already received some editorial suggestions. I'm more than happy to receive more if some board members are happy to send me through. And basically what I want to know is if they agree with the flow, the structure, and the principles that are there. Thank you.
Joe, just to clarify then, are we going to step through these on a page-by-page basis before we get to the approval?
Yes, we can do that. I can do. I can do now. Yeah.
I think that may be.
I can share now. Perfectly.
Okay.
Okay. Give me a second.
So,
yeah.
So you're going to bring your version up so that we can just walk through those marked up changes. Yep.
Yes, my version is exactly the same as the board have in the agenda item 6.3.1. It's there. So I'm going to share my screen. Give me a second.
For members following in their papers, the ED starts on page 29 of 164 of the PDF.
So just to locate the board on what I'll be doing. So until BC 36, it's very much what I had for the September meeting, and I've updated all the editorials that the board suggested. And so the new BCs that the board is seeing for the first time, it starts on BC 37. And so I'll leave it to you, Ian, as I go through to see if anyone has any major point that is not editorials.
So I think, Joe, can we just go, is there anything that, let's just do the BCs at this stage, because that's where you've highlighted the main changes. Is there, has anybody got any points they want to bring up until that point on the BCs? So I'm not seeing any flags up. So Joao, just take us back to BC 37, please.
Yeah.
Okay, so this is where the new BC material comes in. So has anybody got any comments on BC 37 through BC 40? Okay, so BC 41. Okay, keep going, Joao. So BC 42 through 46. Yes, Scott.
Yes, thank you, Ian. On BC 45, where we're kind of laying out the reasons, because it wasn't I had an issue with the reasons. I just thought we could provide a little more context around it. From reading our paper, I felt better about it than just reading here. For example, in B, it's consistent with ISA's decision to retain 16, but we didn't say what was the basis for their decision to keep 16. So I didn't know if these were complete as they should be. I don't know how other people feel about it. I felt like I knew more than what was here when I read those 3 bullets.
So in looking at that, can we have that as a staff instruction to look at that, but I think also in the context of the discussion that we've had already?
Right.
Yeah, okay, thank you.
Okay, so move us forward from BC 46, Joao.
So I would suggest as these BCs between BC 46 and 50 is related to an instruction that staff will bring later in this week to move forward, because all these BCs will be redrafted according to the decision that the board will still need to take on those 2 options on the service potential.
Okay, so on that issue paper that we'll have on service potential, can you please bring the revised BCs back attached to that paper, please?
Yes, thank you.
Okay, so we're now on BC 51 through 54. Okay, so move us on then, João. So BC 55, and then we get into the discount rate section at BC 56. Okay, anything before we get on to BC 59? Yes, Mike.
Thanks, Chair. So it was 59 that I was referring to last week when we talked about reference to COVID. And I mentioned then that we've left this unchanged because it was in line with what the ISB had done. So at the moment, I'm happy to leave 59 as it is with explicit reference to COVID.
Thanks, Mike. And then we move on to BC 60, BC 61. And through to BC 63. I guess my only question is really whether we need BC 63, because that seems to me to be process rather than anything else, and perhaps is better alongside the SMCs.
Okay. I'll remove then BC 63.
Okay.
Thank you.
So with that, we're through the basis for conclusions. Okay, so João, we've looked at basis for conclusions. Let's look at the specific matters for comment.
João, you're on mute.
Sorry, thank you. Staff and the task force discussed the SMC, and we end up recommending the board to ask a generic question on how the IPSASB modified IFRS 16 to the public sector, and if it modified appropriately. And we are asking preparers if they agree or not on how we are proposing to have this standard for the public sector. And with this, I'll open the floor to receive comments.
I'm sure. So I think we've added one BC already, which is on bringing fair value across. David.
Thanks, Ian. I'm just wondering whether it would be helpful to constituents to actually point out to them where the modifications have been made, because it's not easy to spot them.
Yeah, thanks for that, David. I can perfectly make a cross-reference to the BCs where they are, and thanks for that.
Thanks, David. Camira.
Thanks, Chair. Thanks, João. I think this only specific matter for comment could have an unintended consequence that constituents might criticize us because we are actually not addressing many public sector specific at this stage of the project, because the public sector specific issues, we will address them in the phase 2 of the project. So if we ask them how do they think that we address specific matters of the public sector here, probably they will criticize us. So I would reformulate this question and also include an SMC about the term fair value, and also how maybe this issue we were discussing on the inclusion of the service potential, how we address that. Thanks.
Thanks, Camilla. So I think we have a recommendation to come back on service potential, but I agree. I think that is partly, having an SMC on that would address that public sector issue. I wonder also whether we should just add in a reference to in this phase or in phase 1 of the project in the introduction to that SMC, because then that does very clearly say, this is what we're doing now, and we've got phase 2. So you've got the RFI on that. Okay, Todd?
Thanks, Ian. Just listening to the discussion, I wonder whether the request for comments page, which is page 31 on the paper in front of me, whether we provide a little bit of an introduction to this, so that we can mention, that as you say, that it's the phase 1, that there's an RFI and all, some of that context, which might just help readers. We could also acknowledge that this is the second ED on this or something, just to orient people in terms of what this is all about, that it is part of a bigger process that we're working through.
Thanks, Todd. I think there's a bit of a conflict here, isn't there? Because if we make this too long, we're basically going to be writing the BCs again. So I think, we probably need a recommendation back on how we, because I think a lot of this is written up in the basis for conclusions. So we need something that indicates that without doing a blow-by-blow account. So I think we, if we can ask for something back on that balances this without getting too long.
Maybe a paragraph.
Okay, well, let's ask for a recommendation back on that. I don't want to rewrite stuff that we've rewritten elsewhere. So if we can have a recommendation back on the minimum that's required to get that sense over, thanks. So I've got, I think it was David first. Oh, actually, so Mike, you're not in. Yeah, David.
Actually, I put my hand down as well, because I sort of agreed with Camilla and Todd. I think the idea of just making it clear that this is only phase 1 and that there is a phase 2 with separate questions would probably just set the scene and help all round. Thanks,
David. I mean, it may be that actually we need something of the same approach that we're sort of moving towards on the measurement, ED 76 and ED 77, where we do explicitly link, so that you've got the questions in the other ED in that ED, and that might be the approach that we take here. So it very definitely says the questions in the RFI are as follows, and then you've got the whole picture. Mike.
Yeah, look, I'm trying to understand what's been recommended by Camilla and Todd and David. I'm with you. I don't want to make this too long. Maybe the objective of the ED just needs another paragraph to say the objective wasn't to deal with public sector specific issues. That's going to be in phase 2. So I'm sure we can find some words, but it is in the BCs, as you say. And so I think the objective is where we can put it.
Okay. Well, I think, we know what we're trying to do, which is orient people. We're trying to do that without huge amounts of extra drafting. It does seem that we need to build a bridge, and bringing in the questions that we will ask in the request for information will help us in that, so that we are addressing the public sector issues through that. I'll take Adrienne, and then I'm going to wrap up and move us on, because I think we've debated this enough.
I was just reacting to what Mike said. I don't think that's as helpful a suggestion as what I think Camara was getting at, which is that the specific matter should say something along the lines of bearing in mind that the modification is not addressing other lease-like arrangements, or something that explains that this is a partial treatment, and then phase 2 is coming. And so I don't think by putting it in the objective rather than in the specific matter for comment, you get the same message. And I think that's what Camara was saying, that it needs to be a specific message about what's encompassed in this and what is being left to phase 2. Thank you.
Okay, thanks, Adrian. So in summing up, I think we probably, on rereading Objective 1, I think we need something that locates this as part 1 of a 2-part project. I think also in the introduction to SMC1, we need something that identifies it as phase 1. And I would also suggest that from a belt and braces point of view, we take the same approach as we're doing with ED76 and ED77, that you also have the specific matters for comment from the request for information as well, and then you have the whole picture. Okay, so João, are there any significant matters you need to draw our attention to in terms of amendments to the core text or the authoritative text in the standard?
No, it was more for kind of due process, kind of highlighting in the issues paper that staff has action all the editorial changes from the September meeting, and that's why I had that C paragraph just to highlight to the board, but nothing major on that. If the board is happy, we can move forward to the next agenda item.
So can I check, is there anything that any board member wants to bring up on the core text of the standard or the application guidance in terms of the changes made since last time round and mocked up? No, okay, thanks, João.
Thank you. Okay, moving forward, I'm going to share the screen. So moving forward, agenda item 6.2.4, approval. So as Mike has alluded to at the beginning of this session, and the work that has been done since the beginning of this phase 1. So the whole due process has been followed. The CAG was consulted, as Thomas also has alluded to, and we received during these meetings all the development according to the IPSASB's instructions. So in this case, the staff and task force recommendation to the IPSASB is to approve the draft exposure draft 75 leases for exposure, and with a normal 4-month comment period. And I appreciate that perhaps you might want to discuss these later, but these are the 2 recommendations that we have for the board. So I ask the board if it disagrees with the recommendation. Thank you.
Okay, so I think let's take them in turn. So we have 2 items, 2 subject 2s that we need you to come back to us on. One is what we're going to do with service potential, and the other is the objective and SMCs that we've just agreed on. So those are the 2 items that we are we will need to see back. Ross, can you take us into the approval process, and then we'll come back to the comment period. Mike.
Sorry, I just wanted to also remind us that we've also got to change some of the BCs, so that's also going to come back to you. I know that's not authoritative, but we need to do that.
And Mike, those are the ones that relate to service potential, yeah?
Yep.
Yeah, Okay, so we see that as a package. So what's been proposed in terms of the AGs and the relevant changes to BCs. So that's together for the board. Okay, Ross?
So subject to the items that we've just discussed that will come back, we're now going to ask members to go through the voting process. First, I'm going to start with anybody who'd like to vote against the exposure draft to please raise their hand. I'm not seeing any hands raised, so there are no votes against. Second, I'm going to ask anyone who would like to abstain to please raise their hand. Again, I'm not seeing any hands raised. And now I'm going to ask members who approve to remain silent. And I'm not seeing any hands raised, so everyone is approving. We have 16 members in the meeting today. We have 2 absent at the moment, Nima and James Jung.
Okay, Ross. So with the 2 subject 2s, we've approved ED 75. Now we have the proposal from staff for a 4-month comment period. Does anybody disagree with that proposal? Okay, so I think with that, we approve that. Mike?
Sorry, it just thought occurred to me, Chair. We're going to discuss tomorrow night or tomorrow, whenever it is, the RFI, and we're going to have the same comment period. Did you want to just reflect on that? Do we need the same comment period? I presume we will, as long as board members are conscious of that.
Ross?
Yeah, I think we do need the same comment period for both. In terms of publication, assuming we approve the RFI tomorrow, the expectation is publication in January, and we think the normal 4-month consultation period is appropriate for both.
Rod?
I don't disagree with the 4 months. However, I do think it's important to keep an eye on the cumulative impact of the various things that we're asking for. So, I think it's important to have a look at the overall.
Thanks, Rod. I mean, I think the proposal is that we stick to 4 months on leases, but we have the discussion on Thursday in the context of the measurement package, very much with that context in mind. So thanks for that reminder. I think you're absolutely right. We do need to have a look at that discussion on Thursday in the context of both, we'll have leases out for 4 months, and then there's the closure of the comment period on ED 74 and so on. Ross?
Yeah, just on Rod's comment, because it is a good point. We have thought this through from the staff side of things. Given the approval of the package ED 76 to 79, and the expectation that we're going to finalize that group of EDs in late February when we have the check-in, publication's likely to happen end of March, could even be beginning of April. The point of getting leases in that package out early with the normal 4-month time period is to actually have constituents commenting on that before that bigger package is on their radar. So I really think there is some thinking there. We know everyone has to deal with their pressures on time, but at the same time, we do have to keep things moving. And this is a relatively straightforward ask with the ED in the package. So I just wanted to let the board know that we have put some thought into that.
Okay, thanks for that. But that's certainly we need to come back on that one as well and remind us of that, Ross, when we consider the discussion on Thursday about the package of measurement related EDs. Okay, so João, I think that's everything on the ED 75, isn't it?
Yes, for now. Yeah.
Okay. So as I foreshadowed at the beginning, we'll move on then to look at the request for information as the first item on the agenda tomorrow. I think we've moved through a lot of material today, some quite tricky issues. I think we have ways forward on those, but a number of issues we need to see back to fully clear ED 78. So thanks everyone for sticking with us today. I think we've we've done well in terms of moving forward to keeping to timetable, and look forward to seeing everybody tomorrow, and get some rest in the meantime. Come back refreshed for a discussion on the RFI on leases and natural resources tomorrow. Thanks everyone.
Bye, see you tomorrow.
Thanks everyone. Have a good
Thank you.
Thank you.